Preparing a manufacturing overhead budget. At Royal, manufacturing overhead is applied to units of product on the basis of direct labor hour. The variable manufacturing overhead rate is $20 per direct labor hour. Fixed manufacturing overhead is 50,000 per month and includes 20,000 of non-cash cost, primarily depreciation of plant assets. Let's prepare the manufacturing overhead budget. So from direct labor or budget, we know that we need 1300 direct labor hour in the month of April, 2300 direct labor hour in May, and 1450 direct labor hour in June. In total, we need 5050 direct labor hour. Variable manufacturing overhead rate is $20 per direct labor hour. So multiply both of these and we will get variable manufacturing overhead cost for each month and for the whole quarter. Fixed manufacturing overhead cost is 50,000. Therefore, total manufacturing overhead cost for the April is 76,000. For May is 96, and then 79 for the June. Total manufacturing overhead cost is 251,000 for a whole quarter. There is also some non-cash expense included into this cost. So we will deduct that 20,000 non-cash expense, and we have to pay 56,000 because it is non-cash. We don't have to pay for this one. So total payment in the month of April will be 56,000 for manufacturing overhead. For the whole quarter, it will be 191,000. This is our total manufacturing overhead budget. And here we have a small concept that ending finished goods inventory budget. So how much we should charge to ending finished inventory. For direct material, from direct material budget, we know that 5 pounds of material is required for one product and cost for 1 pound is 40 cents. So total direct material cost for each product is $2. Similarly, one product needs 0.05 hours or 3 minutes of time of direct labor, and per hour cost is $10 for direct labors. Multiply both of these and we will have $0.5 direct labor cost required for one product. Manufacturing overhead. So we know that the total manufacturing overhead cost is 251,000. We have calculated right here. And total direct labor hours are these ones. So by dividing these two, we can calculate direct labor cost, manufacturing overhead cost for one product. So total cost for a product is $4.99. In the production budget, we have seen that at the end of quarter, we will have 5,000 units in the ending inventory. So multiply these 5,000 with unit product cost, which is 4.99, and we will have that much ending inventory at the end of the